Hello traders, thank you for coming on my YouTube channel today. My name is Gift Ubakwe, and in today's video I want to show you how I analyze the forex market. You can analyze any instrument using this method of analyzing, and it works on any instrument out there. So the first thing you want to do is to come to the daily chart. You want to come to the daily chart and you're looking for, I know I've always taught you that we are looking for impulse and correction, but I've received some questions on how do you come on the chart and then just get to find impulse and correction. So in today's video, I want to try to make this as clear as possible by telling you the first steps you need to take to the point where you're looking for an entry, you know, how to determine the bias of the market, what direction do you think the market is going, how to find all of those good stuff. All right, so when you come on the chart, the first thing you want to do is take a general look at the chart, and then you want to zoom into the current price. You want to look for the highs and lows closest to the current price. So when I say current price, this is the current price. This is what the price is doing at the moment. That's where the price is at the moment. All right, so you want to look at the current price, and then you want to look for the highs and lows closest to the current price. So in this case, this is the high closest to the current price, and this is the low closest to the current price. All right, so because you're looking at the daily chart, if you place this up here would be good, but it's somewhat too high, so you might not really want to focus on that. You want, because price can react and give you buy or sales opportunities before it gets to that point, so you don't want to miss all of those good stuff. So these are the few points I can find. All right, so I have this low here, I have this high and this other high. So once you've done that on the daily chart, what you want to do is go to the 4-hour chart, and then you want to see what the market has been doing over time. Okay, extend it this way, and then from here what I see already is I see that the market actually had formed something like this. An ascending channel was formed on the 4-hour time frame. So this already gave me a bias that, okay, in the past there was this break of this high here. All right, there was this break of this high, and then this gave a potential double top. Now, because what you're looking for basically is to trade the double tops and double bottoms. All right, so now I see that that happened in the past, so that's where we got this ascending channel. So when you find the bottom and the top on the daily chart, the next thing you're looking for when you come to the lower time frame is to find out how the price approached that double top or double bottom. How did price get there? Did price get there in a corrective form? Did price get there in an impulsive form? So if price got there in an impulsive form, then you might be looking for a correction to continue in that direction of the impulse. But if price got there in a corrective form, then you might be looking for a reversal. All right, I hope that's clear enough. So in this case, price got here in a corrective form, so most likely we are looking for a reversal. So price got there in a corrective form, so you're looking for a reversal in this sense. So let's see what else we can find here. All right, so if you go to, in fact, up here I can even see a potential point here, you know, this point in the 4-hour, because the 4-hour is still considered a high time frame in that sense. So in this point here I can see that price broke this point, and then it's coming back to that point. So let's go to the 1-hour and see if we can find a clearer perspective on that. All right, so on the 1-hour, what can we see? I see this correction already. Okay, so I see this after this impulse. Don't forget, the whole principle is still the same. You're still looking for impulse and correction. All right, so I see, let me even make this clearer for you. So we see this correction. All right, this correction happened like this. There was this impulse, and then correction, and then another impulse. Are you getting that? So that's what we see at that point. And then if you come all the way down, we can see this correction after this impulse. So what does this tell me? At this point, I'll probably be looking for a sell at this point, but this overall market structure is telling me that I should be looking for a sell. So what do I see on the 1 hour now? I see this correction as well. I see price forming another. So this is called pattern separation. I heard this word from some YouTube channels. I don't know how it came about, but it's basically saying after a pattern, the price forms another pattern without necessarily forming an impulse. Okay, so it just forms a pattern here, another pattern is formed just after the pattern. So this is one pattern, and instead of an impulse down here and another pattern here, you know, something like this for a correction, what did price do? Price instead gave us another pattern that still points to the fact that we can be expecting a sell. Okay, so at this point now I'm expecting a sell on this because I see that price has approached this. Don't forget we drew this potential double top on the 4-hour time frame. All right, so if I use this tool here, you can see that that's a potential double top, and price broke that potential double top. So price, the way you're looking for now is that point. Give me a sec. That point up there becomes your point of interest, where you're actually paying attention to for any potential, you know, reaction from price to give you a signal of what to do next. At this point, I would go to the 15-minute time frame, which is where I get my entries. So this is where I want to now look at what price has done. In that sense, I can see up here that price has formed an ascending channel up here. So this is already a sell entry, even though this is going to be a very risky sell entry. This is going to be a very risky sell entry, but how I normally like to enter my trades is that I would wait for price to give me an impulse down here and then form a correction, something like this on the 15-minute time frame, and this is where I would take my entry. So this is a potential sell trade for me. This is still very valid for this week, so this can happen. I'll take this trade like this with a 10 pips or say 11 or 12 pips, just something that gives it a bit room in case price decides to go up. Let me take away that box, we don't need it, and then I'll take away this line. I always like my charts clean. All right, we already used the line to determine that this is a potential double top, so now we are waiting for this to come all the way down right there, give us an entry, and then the point we marked for on the higher time frame as the low would become a potential take profit. All right, but then this is going to give us 12%, but then this is also a possible point of reaction. Price can come here and give us, you know, a reversal, and then you lose all of these profits you've made. So you want to pay attention to this and trail your stop. All right, this is your potential first take profit, and then your potential second take profit. All right, and there you go. You've just analyzed the AUD CHF chart in less than how many minutes? Less than 10 minutes. You've been able to analyze this and get a bias on what the market is about to do. In fact, from what I can see right here, I feel like this sell might actually happen sooner. I see a correction already taking place up there. So if I take this forecasting away, I'll show you what I'm looking at up there. So if I take this away, you can see that this is already forming a somewhat corrective shape up there. So something like this, that means this entry could happen earlier. You know, it has broken out of this structure. It has broken out of this structure and it's forming a correction. So if you go to the 5 minutes, even though I rarely come to the 5 minutes, but the 5 minutes is just going to give you a better view of the correction that is taking place. So what am I going to wait for here? I'm going to wait for the price to, you know, come up here and reject and form and give me a bullish candle, or a bearish candle rather, a strong bearish candle that comes all the way down. Once I see that, then I take that as a point that the price is about to drop, and then I would set my sell stop entry just below the price, not too close to the line, because the price can do this. Price can come all the way, retest this and go up again, and it can even form something wider and take you out and still drop. All right, so you want to be sure you're giving the price some space down in case it decides not to drop straight up. Then it can do whatever it wants to do, and you can adjust your entry You know, if it does that, you can adjust your entry, move it a bit closer up there, and then you can still get triggered in when the price is ready to commit. Okay, if you enjoy videos like this, let me know in the comment section, and I'll do more analysis videos like this, telling you exactly how I analyze the forex market. Thank you for watching this video. Do well to like this video, subscribe to my YouTube channel, and let's grow this channel together. Take care until I see you on the next video. Peace.